Okay, guys, I hope you guys are out there trading profitably. Today is May 1st, 2008. We're doing our daily review. The market's been open now for just a little over an hour and 20 minutes. It's 10:51 Eastern Time. And we're just going to take a look at our positions because we've just turned into May. Now, when we've sold the May options, we've created our positions for May expiration. Now we're getting close to the point where we take a daily look at we always take a daily look, but we want to take a little closer look as the closer we get to expiration because there's a price risk at this point. There's just adjustments they're a little bit more tricky at this point. Yeah, they are common, but they're a little bit trickier at this point because there's not as many options that when making adjustments. I mean, there's still adjustments that you can do, but basically what you're doing is you're tightening the noose around your strike prices and getting closer to at the money options at this point when you do make an adjustment. So you really want to be able to make adjustments carefully at this point because we've only got, let's go up to the trade tab here. I'm pretty sure we don't have many days left. We've only got 15 days left. We've got 2 weeks before expiration. So, at this point, what we really want to do is we want to be able to make our adjustments if necessary. Probably we're going to be making those adjustments a little bit closer to the at-the-money positions. This is we're getting down to the wire on our positions. In fact, we could probably even start taking a look at trades that we're going to be making for the next option expiration, which is going to be June. And there's still 50 days out. We can put some initial positions on for June, and I would go maybe June, July on the SPYs. Let's take a look at the volatilities. The volatilities don't seem to be there's a positive skew here, but that's not going to worry me too much. If we go out to the next month, it's even worse. December, September is still 21%. July is 21%. It's actually lower than September, so I would go July. I would go June, July on those. But anyway, we'll take a look at some far out initial positions when we get into another video. What I want to do today is just kind of analyze our current position statement, take a look at our numbers, and kind of go through a thorough examination of our positions. Our current delta on overall positions is about $9, which is absolutely perfect because if we do get a little bump up here today, we're going to collect an additional $9 as prices rise. Our gamma, of course, is always negative because we're selling options. We're always, if we're short options, we're going to be negative gamma. Our theta has increased nicely now. Our theta is up to $54, $55. And remember, when we first put on our trades, it was around $24, $25, or maybe $30, someplace in that range. But it's increasing now. The closer we get to expiration, that's exactly what we expect theta to do. Our Vega is at 56, which means that basically if we drop a percentage point in the VIX, we will lose $56. If we gain a percentage point in the VIX in volatility, then we will make an additional $57. But that is a relatively neutral Vega number, so we're not too worried about that at all. Actually, the EEM and the IWM are positive Vega. The diamonds and the SPYs are negative Vegas. So, if volatility does drop and we continue our upward climb in the markets here, we're going to be looking good on both the diamonds and the SPYs. Get hurt a little bit on the EEM and the IWM position. Our profit is starting to grow. Our profit today is beginning to grow. So we're starting to grow daily on a daily basis here. If we take a look at our analysis tab and we take a look at our overall portfolio, you can see that because, that's May 1st today. We're doing good. We're up. We're up fairly well here. We're doing good. And I think that our position is looking really, really beautiful at this point. We are in the center of our profit picture. There's no adjustments that we really need to do today. If things run up, we're going to have to do some adjustments, maybe something closer to the money on the SPYs or the or possibly something on EEM. But we can take a look. We also have the Qs in our back pocket that we can always make adjustments on, and those are really nice to do closer to expiration, right at the money. So I think we're looking really good here. The only thing I'm concerned about is the VIX. So let's take a look at the VIX real closely here. Yesterday the VIX actually was up just slightly when the market was up like $100, and it kind of it was an indicator here that the market could have gone down. And what happened was yesterday there was a Fed announcement, quarter rate interest point cut, and right after it came out, the market dropped about 150 points. It was up 150 points, and it just went to flat or just slightly negative for the day. I think it was down 11 points. So the VIX just went up. Let's see, how far did it go up there? It went up almost a full percentage point.